You've probably seen many YouTube videos teaching trading strategies, but they're using the replay mode. The replay mode. They pick a strategy, they fit it to a chart that looks perfect, and they press the replay button and teach you how to trade it. The problem with this is they don't show you how to execute it live when things get messy. Well, I have good news for you. I recorded my screen for the entire day and caught a live trade. Now, before I show you that, I'm gonna take you through 3 steps. I wanna explain the philosophy behind the trade and how it works. Then I wanna show you the stock in detail and evaluate it live with you and show you the plan and me planning it all out. And then the live trade and execution with my live commentary. Let's get into it. Now let's start with scanning. The first thing I do when I look for day 1 gap fails is I look at the biggest percent gainers on my DAS platform. Now, what am I looking for? Well, I'm looking for a few items. Number 1, I'm looking for any stock that's gapping up 50% or more. And I need to make sure that that stock hasn't moved at all in the past. It can't move yesterday. It can't move 2 days ago. I want it to be dead, a stock that has never moved at all. And what if there isn't one? Well, I'm gonna go enjoy my day. If there's nothing on my scanner, I'm gonna spend time with my family, friends, or work on content for you. Now, why do I want 50% plus gappers on day 1 fails? Here's why. On the psychology part, a lot of these stocks that haven't had any momentum at all, hasn't moved at all, just been fading all day, all year, when they finally get life, if you were that investor who bought a stock years ago and it finally popping and going higher, you're gonna be more willing to sell that position for a break even or a smaller loss. And that is what they're doing. So another reason why we're looking for stocks that are gapping up 50% is because all of the degenerate traders who are learning the breakout strategy. If it's gapping up 50% and it hasn't had life at all, that means there's a high chance it's gonna be breaking out of key levels on the daily. So you have these new traders buying all pre-market thinking this thing's gonna run at the open, and if it doesn't, they're gonna panic out. And then another aspect to the 50% gap fail is you have all the traders who don't trade pre-market, but they're waiting for the open, but they're looking at the pre-market highs. And if it breaks that area, they're considering that a breakout, and they're rushing in, buying that breakout, which is where we're gonna be shorting it. And if they don't get the move, they're gonna panic out. So we have all of these people panicking, which is gonna make the move. Now, we're looking for the 50% gappers, but we're also looking for a stock that has range. So what I mean by that is if it's gapping up 50%, but it only moved 10 cents, maybe it's a really small stock, there's not a lot of range there. We want something that's gapping up dollars. So that way we can capture a small piece of the range and have a good risk reward. And the larger the range, the easier it is for a new trader to capture a piece of that move. Because you don't have to be perfect to catch 25% of a 100% move. Now let's review the scan. We found the stocks that are up 50%. The next step is we're gonna pull it up on our charting software and look on every time frame. And what are we looking for? Well, we wanna make sure, as we mentioned earlier, that there hasn't been any life in the previous day. Because if there was life on the previous day, then this is not a day 1 gap fail. Again, if there's life on the previous day, there is not a day 1 gap fail. Once we determine that this is definitely a day 1 gap fail potential, we then want to look at every time frame, and we want to draw out key levels of support and resistance for determining where we should get in and take profits. So why am I looking at every single time frame? Yes, daily to hourly to minutes to 1 minute. I'm looking at all of them, and this is why a lot of new traders are stuck on one time frame. I don't know which time frame they're stuck on. They're going to be stuck on one of them, but there are batches of traders stuck on the 5 minute, the 10 minute, the hourly. And if I can find a setup that lines up on all time frames, well, then I know there's a lot more people interested in that setup, which is to our benefit. If it's going to panic, more people are going to panic out, which is going to help us make money. Another reason I'm looking at all the time frames is because I also want to make sure that there isn't key levels on the bigger picture time frame of resistance or support. Support meaning areas I want to cover and take profits, and resistance maybe key areas that will give me more confidence in shorting. Bigger time frames take priority. So if I see key support on the 4 hour, That's going to take priority over the 2 minutes. Now keep in mind, I'm going to be sharing the chart and going over all this in detail and how I analyze it, but I want you to get the key ideas and what I'm thinking before I show you that so you're not distracted. So let's start planning the trade, the entry. What I want to do is always enter near pre-market highs. Now, the reason I'm doing this is, again, as we mentioned earlier, that's where a lot of people are trying to buy. I want to sell to them because they're buying. Now, where's my stop? My stop is always going to be slightly above the pre-market highs. Now, again, I'm only entering at the open, but I'm using the pre-market as a guide to enter and put my stop. And then profits. Where am I going to be taking profits? It's going to be at the key areas of support that we mentioned earlier. And don't worry, we're going to show you all of that in just a second. Now, at this moment, as a new trader, you might be feeling very nervous, and that's okay. The difference between a new trader and a trader with experience is how they acknowledge those feelings and make decisions. So before we go into the live trade, I want to go ahead and take the time and review the big picture, how I plan out the trade, and go into details so that way you know what my plan is, where my stop is, where my entry needs to be. And then when you see the live trade, you'll know what the plan is, you'll know everything about it, and we can go into more detail of how I'm thinking during the trade itself. Now this is APLM. Now, if we go ahead and zoom in here to the part that matters, this chart, as you can tell on the volume down here, there is literally no volume on any day. Now, this is very important because I want to find stocks that are on this day one of the move. It's a day one gapper. So that's what I'm looking for. So if I see that the prior day has a lot of volume, and then the next day is our day one and it has volume, that's not a day one gapper. That's already had volume the previous day. So this is the day we're going to be looking at. This is Friday, October 27th. And on this day, before this day happens, because again, we're going to notice on the big percent gainers, we're going to see it. We're going to look on the daily and we're going to notice that there is no volume prior. If we go ahead and go back here, there is really no volume prior. Anything under 1 million is really no volume. And so the next day when we're gapping up, look at the significance difference. There's massive volume this day. Very big volume. Completely different than any other day. Look at, if I zoom all the way out, there's been no day where it even came close to having the same amount of volume. So that's the first thing. I want to make sure there's no volume prior, so it is truly the day one. And if there's volume under 1 million, I don't really care about that. If it's 5 million and it's always been 5 million, it's not a big deal. But anything over 10 million, that might get me questionable. But really, for most cases, if you want to be safe, just make sure there's no volume prior days. So like prior days, there's no volume. This is under 1 million, so we're fine. The day we gap, if we go ahead and zoom in on this day, which is right here, you will see that a lot of volume came in pre-market. So this area right here is all pre-market. You can see here it's highlighted in a shade of green and blue. That's after hours, this is pre-market. So during the pre-market, we actually have some good volume coming in. Let's go to the 30-minute time frame. On the 30-minute time frame, you can tell that down here on the bottom left, you'll see the volume. Just look right here. You'll see all the volume coming in. So you have 1 million shares, 600, 200, 2.6 million, 3 million, 4 million. So already in pre-market, we already have massive volume. We have so much that it overwhelms any volume they had in the past. As you saw, the biggest volume before this was around 800,000, 700,000. It was under 1 million. And already pre-market in the first 30 minutes, we have over 1 million shares traded. That's what I want to see. I want to see a day one gapper that really is different from all the prior days. It's gapping up. And in this instance, this stock is gapping up over 50%. So if I go ahead and show you, we go to the daily here, and we go back to this area, and on this day, we closed at 56.80. So right around, let's go ahead and zoom back in. As you can see right here, if we look at 56.80 and come all the way up to this area where it gapped up, that's 144%. 144% clearly goes and passes above 50%. So that's already number one. Number two, we're actually closing pre-market strong. And what I mean by closing pre-market strong is right before the open happens, we're actually closing up here. We're going to be ending the pre-market session in near the end and around the highs, which is a bonus factor. I have found many times where a stock is opening, let's say this is pre-market, it does this, comes down, and opens down here. I have found that it's very low odds we'll get that push. And it may not even work at that point. So I prefer anything that's going to be opening up near the highs or somewhere down here. Don't get me wrong, I will short it if it opens down here and pops right at the open, but if it doesn't happen at the open, I'm going to avoid. Now, because we know this is hitting our radar, it meets the criteria of 50% gappers, right? Opening near highs is a bonus. The next step is we want to find out where our level of entry. Now, I like to enter in near the highs. So I like to draw my line at the high day. So in this case, 142 pre-market, because this is the open. Before the market opens, in the last 5 minutes of pre-market, meaning by 9:25 Eastern time, I am setting my orders out to get executed. So there's oftentimes I will set orders near the highs to get executed with a risk slightly above. Now, in this case, you can see it might make sense because we have 50 right just above that would be an ideal place of risk. So in this case, I will be risking that area. Now, whole dollar, half dollars, a lot of traders talk about this. I don't always just seek for that. Typically, I would like to risk a key area of resistance. So if we go out in the 4 hour, you'll see there's no real key area until 170. Because of that, I'm going to go ahead and use 150 because I know a lot of traders love using that area. And just because I'm risking 150 doesn't mean I'm going to stop right at 150. I would love for it to see some type of test. So like if we get a pop at the open and we hold for just a couple of minutes and then crack, I'm fine with that. But if we get a pop at the open that's strong and then we hold and push, I'm cutting. If we get a pop that's barely weak and then fails, I'm good. Because stocks at the open have a lot of emotion. Remember, we talked about why we're even looking at the stock. There's so many eyes on this. There's so much emotion, especially at the open. There's so many orders sitting at the open. So there's going to be a lot of whiplash. So when we know that's going to happen, we need to be aware and plan accordingly. I don't want to risk too tight and then get stopped out because that happens so often to new traders. Now, once I know I want to put my orders in this area, and I know where I want to stop out, which we know is the 150 zone. Let's go ahead and put it in the 150. I want to find out where my profit target is. Now, typically, I want to find key areas of support and resistance. So in this case, this was a resistance area that held for a little bit. So I will be taking some off in this area just because, I mean, it makes sense to me. We broke out twice, failed, but then we held. So this is an area where I want to take some profits. However, I prefer to wait until the 103s and then ideally until the 80 zone area. That is my plan going into this trade. Now, of course, we're looking in hindsight right now. We can see it all panning out. So, of course, these levels are obvious now. But pre-market, when I'm trading, I don't know this is going to happen. I have no clue. Because I have no clue, I'm still doing this same plan. And when I show you the trade, you'll see I don't see what's going to happen. And you'll see me get stopped out a little bit of my position because I don't know what's going to happen next. And that is trading. Like, you don't know what's going to happen next. You just got to be prepared. You got to have a plan and stick with it. And judge yourself off of the plan and sticking to it, not off of the P and L. Don't focus on the profits. Don't focus on the loss. Focus on the execution. And so I'm going to go ahead and show you now the actual trade itself. And we're going to go into detail what I'm thinking while the trade is happening. So let's go ahead and do that. So this is the trade. We just went into detail on the plan. So you know the plan in detail on APLM. Now that you know the plan, you're going to see this trade play out and how I execute it live. And I'm going to explain what I'm thinking as it's happening. Now, this platform is DAS Trader Pro, which I use through Cobra Trading, which is my favorite broker. They're also a sponsor. Definitely check them out because they hook up everyone who watches the show with 33% off all commissions for life. They have the best and most cheapest borrows in the industry, hands down. I've tried all the brokers out there, and they have the best customer service, which really matters when you have a lot of money on the line. So definitely check them out and just let them know Be The Trader sent you. Now, when it comes to APLM, you can see I'm already in the trade. You'll see this red triangle. That means I've entered the trade short. Again, because I entered the trade short, it's 9:26 a.m. As you can see, it's about 5 minutes before the open. I'm in the trade. I'll give myself about 5 minutes. I'll enter a trade. That to me is considered the open because the volume starts to pick up. And I'm risking the 150 zone. Now, we're going to go ahead and play this out. And what we're doing here, this is real time. So I don't want to speed this up at this moment. Instead, I want you to see, like, at the open, we get some massive moves. Look at that. We get a big pull down to the 120s. So instantly, Me and a lot of traders, just because I've been trading for a long time doesn't mean it doesn't happen. Yes, I have a little sense of euphoria, like I'm excited. And you can see I took some profits there. Now, how much am I taking off? I'm taking less than 10% off anytime I'm taking before my key areas that we drew out. The reason for that is because I just have an itch and I have that feeling. And so I know for me, it's hard to not take anything. And back in the day, I would take half, a quarter, a third. And that really hurt my performance in the long run. So instead of just being real strict and making myself never take profits early, I still do it, but I'll take 1% off, 2% off, no more than 10% off. In most cases, it's 1 to 3% of my total position because I don't want to ruin the chance of having a good trade become a small risk reward trade. Now, at the open, we got the euphoria. Everyone's feeling that, even myself. All the traders you look up to, all the traders I've interviewed, they also experience it. The difference is they acknowledge it and then they make a decision. So I acknowledge it now and realize that if I feel this, there's a ton of traders out there who are feeling this and they're emotionally getting in short right here instead of on the pops. That's not what I want to do. So if you're that trader, please stop because right now it's still the first couple of minutes of the open. It's going to pop. And look, we're getting a pop right now. And instead of freaking out, I am looking to add to my position. Now, I did add to this position at some point on this pop. And here is what I decided to do. I wanted to add to the position with a tighter risk add. Now, what is that, you might ask? That's whenever I add to my position with a separate order in my head. Like I'm thinking this is a totally different trade. I'm going to risk 1/10 of an R, 1/5 of an R, your choice, on this add. And the add's going to be real tight. So I'm not going to cut my main position just because I cut my add. So I added because it looked like we were rejecting the highs of the 140s again. So I'm adding with a stop right above 141 because I can add a lot more shares with a tight risk. Now this is a little bit more advanced. It doesn't work all the time, as you can see. But if it does work, you can really increase your R. And keep in mind, I am not cutting my main position. I'm just cutting the add if that gets stopped out. Too many times you could add and then cut out everything, which I've done in the past. So as you can see here, it pops to 145. My add gets stopped out and then we reject. So I'm still in the position, full size. Now, will that bother me? The little add getting stopped out? No. Because I have this planned out. This is part of my plan. This is something I always want to do. If something shows me weakness, I may want to add just to slightly increase my risk, but greatly increase my reward. Sometimes you pay for it. In this case, I paid for that. Here's the thing. When you do that, first off, if you're going to do that, please do not cut your entire position. I'm telling you, if you're new to this, you will. And it's okay. Don't beat yourself up because I used to do it all the time. You get emotional and then you get nervous. Like if I got stopped out of my ad, maybe the trade's not going to work. And then that gets in your head. Don't do that. Stick to the plan. Overall, stick to the plan. At this time, I am not looking at the trade anymore. I am letting the trade play out. And I am letting alerts alert me from TradingView to tell me, hey, maybe you should look at this. Maybe you should take some profits. And if I don't have alerts, I'm also looking at it every 5 minutes, every 10 minutes, because I am doing other things like working on YouTube, creating content like this for all of you, planning. I love a lot of things that I do. I love trading. I love content creation. I love helping others. And so therefore, I keep myself occupied. The reason I bring this up is because if I sit here and watch this action, because I'm watching it now with you and I can even feel now, even though I'm not even in the trade live currently at this moment while I'm recording, of course the trade is live, it makes me nervous because I don't like watching the 2 minute and the time in cells just staring at it because there's so many things that can happen that can trick you, that can play mind games, which we'll dive into in a whole nother video. If you want to dive into the mind games of level 2 and how people manipulate it, that's a whole nother conversation. But in this case, I don't want to stare at it. I just want to stick to the plan. And if you're someone who stares at this and you can't stick to your plan because you're just constantly looking at this or looking at your P&L, that is a problem. And you need to figure out rules to stop that. Now we're starting to get a halt down. Because we're getting a halt down, I'm feeling a lot more confident. My stop is still the same. But in this case, this is where I might consider either adding to my position if we get another pop with a tight risk now at the high of day, and moving my stop to the high of day. Because now if we get a halt down and then we come all the way back, break highs, this is not looking good. This is not a day one gapper. This is something else. So it's fitting my plan. It's starting to work. And so now we're going to fast forward it because I want you to see, I don't want you to sit through all of this. And now you'll see, like, after we fast forward this, it unhalts. And at this moment, I'm just letting the play out. I want this to work. And again, as we looked at here, I'm not perfect, but I want to take some profits, maybe in the 115s and the 103. So we go back to the trade. We almost got to 115. Actually, we did. We got to 114, but I didn't take anything. And sometimes that's because if I end up taking some too soon, which I did take some on a scratch trade where I scratched the itch. Sorry, not a scratch trade, but a scratch the itch execution, just taking a little bit off. When I got stopped out on that ad, it kind of made me say, you know what, I want to hold for the move on this because I already took a small loss on the ad. I don't want to take a small gain here. Ultimately, I want to hold this for a bigger move, maybe the ones. Now we're getting that test again in the lower day. Now, when things happen like this, it's so fast, it's early, it's still only 15 minutes after the open. That makes me feel a lot better to hold and take profits at later targets, which is why I don't take it right away, as I mentioned, for two reasons. Number one, I already took somewhat of a loss on the small ad. I didn't want to just cover that loss with a small cover at the 115s. Instead, plus the time of day, it's not even 10 o'clock yet. This thing is moving in my favor. I want to wait until the ones to take profit and then hold this hopefully for the 80s. And that's what I ended up doing. You can see I took some profits in the 104s, 105s. And at this point, now I'm feeling good because I'm already taking a quarter off at that point. And now I want to hold the rest for the move and or a stop out. And if I get stopped out at high day, I'm okay. I'm not even thinking in my head, will I be profitable? I don't care. Like, that just means it didn't work. Even if you make some profits, it didn't work. You don't grow your account by making some profits here, scratch trades here. You grow your account by sticking to your plan in the long run and expecting to take losses and break evens along the way. It's going to happen. So now we take some profits at 105. We're going to go ahead and fast forward this a little bit more. We break ones. And when we break ones, $1 is a psychological level. So there's two things that go to mind. Number one could hold very strongly, which could make me consider taking some off. And then number two, if we break one and we hold under it, it could be a whole new stop, which would dramatically move my stop down, which could then increase my reward even if I get stopped out. So we're going to fast forward this a little bit more. And now we're breaking the 90s. So we're breaking under one. And because we're breaking under one, now I'm starting to think if we test one and fail, I could use that as a stop. But we're getting close to my target, the 80s. And we're getting close to 10 o'clock. And so here's the thing. If we're getting close to 10 o'clock, then I want to make sure to start taking some off for two reasons. Number one, we're getting at my profit target. Number two, we went straight down. And for 30 minutes straight, we went straight down. So there's bound to be some type of bounce. I don't know how big the bounce is going to be. But I want to prepare. I want to take some more off just in case. So that way if we do bounce, I know I took half of my position off and I can ride the bounce if I need to comfortably. So I ended up taking another quarter here. And so I am down to half size. And at this point, things are looking quite good. Now, on this trade, I am looking for the 80s. That is my ultimate goal. Will we get there? I have no idea. But at this point, my stop is still high day 140s. The reason it's high day still is because we haven't had a real bounce with the fail where I can adjust my risk. Sure, the $1 level did fail, but we haven't tested it yet. So I'm looking to see what will happen if we test that. So I'm gonna go ahead and fast forward this. So now we have the one potential test and fell, but we didn't bounce. We just kind of like held right in the 90s and failed. And I took some off in the 80s because this is the zone where I want to be done. So now I'm down to 25% of my position because I took another 25% there. And at this point, I start to question things. I'm like, why am I even still in this if we hit my target? And sometimes I find myself getting greedy. I find myself thinking it's 10 o'clock. We still have like another hour till it gets closer to lunch. And so I know this could potentially move more, and I don't want to be completely out if it goes further than I thought. Now, this thought right here can really get me in trouble because it could make me hold a really good winner when it's already hit my main target for no reason other than greed. Because big picture, as we mentioned earlier, let me share the big picture. This is where I want to take off in the 80s. So because of that, I'm just thinking, what if it tanks further? What if it goes all the way to the 50s? I want to be part of that. I'm human. It does happen. And ultimately, I try my best not to let it influence my trades. So what I tend to do is try to hold and find a reason to stay in. But in this case, I'm already thinking, I'm going to risk one. I don't want to hold the other position above one because it just doesn't make sense, because at this point I know I'm being greedy. And so I'm adjusting my risk because I know I'm being greedy and I know I want to at least stick to the plan. But there's conflicting, right? Because it hit my target. So this is where you can make your own decision. For me, I end up, as you can see, just taking it all off, and it ends up holding, and I was done for the day. So as you can see, I ended up taking it all off and I was done with this trade because it did hit my target. So I wanted to share the reality of what I think about when I'm in the trade and what happens during the trade, because it's very important. Nothing's perfect. You can see it took a stop out of my tight risk ad, and that's just part of the game. So again, I wanted to share this reality with you because you understand you don't have to be perfect, and you're going to be fighting conflicting issues and hopefully explaining how I'm thinking about my stop, how I'm thinking about where we are, time of day. You're starting to think more like a trader.